welcome back to Royal Blu FX. In today's video, we're going to talk about structure. Yes, structure, because a lot of the times I see a lot of people referencing and they're looking at structure the incorrect way, and structure is really just that one thing that a lot of people seem to sort of kind of not understand. So in this video, we're going to talk about it in the sense of supply and demand, because structure at the end of the day is supply and demand. It all depends on how you identify supply and demand as to how you're going to be able to identify structure correctly. I'm going to talk about a little bit more about what type of supply and demand you need trading specifically. There's going to be an order, obviously, in the short term. Essentially, supply and demand is just your major, sub and minor, and micro structure. It's all in this video, guys, so stay tuned. The way structure is really done is based on your major highs and major lows, sub highs, sub lows, micro lows, and micro highs. Okay, so the way I always see structure is based on supply and demand. Okay, so wherever there's supply, there's always going to be supply or demand that's responding to supply or demand, right? So in order for price to do anything, okay, let's just say, for example, prices are going bullish, something like this, okay? In order for demand to occur, obviously, there needs to be some supply, right? So I'm going to draw this out a little bit here just so I can show you guys how this looks, okay? So obviously, you know, nothing like this is going to be always picture perfect, right? Supply and demand is never going to be picture perfect. But this is just kind of sort of for you guys to see and understand it theoretically how everything works. So if price is going bullish and then we see price going bearish like this, right? In order for price to continue bearish, right, we need more demand in the market, right? So you can obviously understand that whenever there's a break of structure like this is a chop, right, from this high to this low. This is a swing high to swing low down here, right? And it looks like prices are reversing, right? Let's just pretend now, oops, let me just get rid of this. Let's just pretend that there is supply coming into the market, right? Let's pretend that there's major supply all the way here on the left side. And now we're looking for the confirmation when price reaches a supply zone to look for price to go bearish, right? So the way we look at this is in order for price to continue bearish, we need demand, right? So if prices break, let's just say prices break the chalk like this. This is that first a reversal in the market, right? Prices need to obviously push bullish, and they need to push bullish for a good reason. Why? Because there are suppliers waiting for people, for the demand traders to come in, right? So now when there is demand like this pushing bullish, there's going to be supply waiting right here. And you might be thinking, well, Royal Blue, isn't it that price will actually come up to this high here, right, instead of this high? Not necessarily. The only reason why is because what we do is we trade supply and demand based on reaction points, okay? This is what's called a reaction point. This, in fact, to us is a flip, okay? So we would wait for price to get back here to the supply zone and then continue price bullish, just like this, right? So again, you need to see how structure is done. It's not always your... you might also think about this actually, you know, why does price never retrace about 90% of the way all the way back to your main supply zone like this, right? Why does it sometimes, you know, fall short based on, you know, from this high to this low? So this might have been maybe the EQ point. Let's see if that is the that's the EQ point. No, it's okay. It's in the EQ point. Yeah, right there. So you might be wondering, like, okay, so price comes to the EQ and then it just falls. Why does it do that, right? Well, that's because it's the supply zone. That's where the next supply has taken place. Okay, so what you need to be doing is matching supply and demand. You need to match each high and low based on supply and demand. Wherever there's supply, there's going to be demand. Where there's demand, there's going to be supply. Okay, so if prices do something like this, all right, and then shoot bullish, right, what is price doing? Price is responding to demand, right? Because there were interested buyers. There were buyers here at one point in time, right? And then there's more buyers here that are interested in buying based off of these buyers, right? Because a lot of us were taught to buy based on where another demand is or where another supply is, right? So other demand traders come in, right? So now that we have made this impulse, there's a lot of supply, right? There's a lot of supply here, and a lot of suppliers are interested in buying more, right? Excuse me, not buying more, to sell more of their positions, right? So when demand comes in, right, more suppliers are coming in, right? Now, why would it be this supply zone? Well, it's because this is the next high that is taking place, right? For the next supplies to come in, right, and sell their positions, right? Now, obviously, I want to sell my profit at a good price, right? I mean, once I make money, right, I want to be selling it off at a good price. I don't want to be selling it at a bad price, right? So price comes in, right, continues bearish, right, then breaking a new low like this, right, something like this. Okay, so let me explain major, sub, and minor structure. So every time you're looking for your structure, always understand this, and I'm gonna actually draw it over here so you guys can see this. Always understand this, that whenever there's major structure, let's just say this is a major low like this, major high, major low, okay, and major high, maybe we can do this, right, something like this. We'll put a little noise into the market like this. Okay, and so anytime there is a major low or major high and major high, right, always think about that I'm not trading the major lows and major highs. What I'm trading is the substructure, sub and minor structure, right? You're trading the sub and minor structure. So you're not necessarily always, so this is how you think about it. Always think about being one structure ahead of the previous one, right? So like if I'm trading a sub low and a sub high, if I see a sub low and a sub high, what structure belongs for the sub and minor structure, right? It's your microstructure. So let's pretend again, hypothetically, this is right now your minor low, minor high, right? Minor low right here, and then your minor high. What belongs between the minor lows and minor highs? It's your microstructure, right? So we need to understand where is our microstructure. Our microstructure is this little low, this little high, this little low, and this little high, okay? Just like that. So in theory, prices should come right here because this is the next demand zone, right? And then prices will respect this, or we would look for price to respect there, obviously. We could look for more confirmation here now for prices to reverse and to go bullish, okay? You might also think about, okay, well, yeah, Royal Blue, what about this low and this high though? I mean, shouldn't price theoretically just drop here? Yes, it will eventually, right? Because everything is fractal. Okay, just because when price is showing the way it is, the way it's presented to right here in this drawing, right, you can see obviously that this low has not been mitigated, right, because there was supply down to the left zone right here. There was some supply just like this, okay, and there were, supply was like this, right. Let me do this better. Came in here like this, right, something like this. And so when there was supply here, more other suppliers responded to this supply right there, which means that this is your next demand zone because this is where the major demand zone took place, right? Or your minor demand, right? So again, let me just do another drawing here just so I can show you guys in sort of in a nutshell a little better. Okay, so when we have a bullish, right, move like this, we're doing the bullish perspective, right? This is your minor low, minor high, excuse me, that was my alarm. Minor low, minor high, minor low, minor high, just like this, okay? You can see now sub low and sub high are taking place, right? Now we have minor low, minor high taking place again, just like this, okay? So always think about it. If you're looking to trade your minor structure, always pay attention to where your major low and major high is. So our major low and major high have taken place here, major low, major high, major low, and major high. All right, so if I was to delete the substructure, which is the red part, sub and minor structure, which is the red part, like this is what you see, right? You're looking at a low and a high, low and a high, right? Perfect. So that would be your, let's just say 4-hour low and 4-hour high structure, okay? Your major structure. Then if I bring this back, now you see your, say, 15-minute structure, which is your internal structure, which is your sub and minor structure, right? Internal sub and minor structure create your major structure. So I always look at it this way, okay? Whenever I see the internal structure, what I'm trying to look at in retrospect is where is the major structure at all times. Okay, and this is perspective based. Okay, depending on what time frame you're on, this is all perspective. Okay, if you see a high, like if I'm looking at the markets right now, as I'm seeing the chart, the way I just drew it, right? Obviously, this is my main high right here, my main low. And in between it, there's noise, right? Which is your sub and minor structure. So in this case, I will then tell myself, okay, I need to see now where my sub and minor structure fail. If prices are bearish here, right? And we see that there's a high, low, right? Substructure is going bearish. We are obviously looking for minor structure to take over. And we need to see price fail. We need to see where supply fails, right? So therefore, we see it here. We see that there was supply coming in here, right? More supply that came in here, and the supply failed. Therefore, price broke, and your entry comes into play, right? And this is where your entry would be to target the next high, just like that, okay? So then, when price reaches an all-time high on the major structure, from this low to this high, we obviously wait for prices to come and do this, to come and sweep all this liquidity, right? And it'll do that, just that again. It'll do this, and what are we focusing on? We're focusing on for the supply now, for the demand to fail now, and then for supply to take over, just like this, right? Something like this. Price that comes back to the demand. We wait for the demand to be respected. Then we wait for now for the demand to take over. We wait for the supply to fail. Right here, there's your sell. Right, to buy. Price fails, comes back to the structure like this, and then it continues bullish like this. Okay, so that's how I see the market based on the two types of structures. If you're ever looking at the structure, just don't get yourself confused, because what you need to be looking for is the two structures, okay? If I'm trading the major structure or the sub and minor structure, I need to look at where the major is. If I'm trading the micro, I need to look at where the sub and minor structure is, okay? And that's how you guys do it. That's how structure is done. Okay, so and obviously supply and demand comes into place based on that structure, okay? Let me delete this, and let's go through some live examples so I can show you guys what happened. I think on these trades right here, actually, right over here. Okay, so let's talk about these, because these are the trades I've taken today so far. Let me delete this here, and this will be kind of quick. Excuse me. I don't like seeing a lot of I don't like seeing a lot of drawings here when I'm trying to show people my, real stuff that I've taken, the real trades. Okay, here. So I've taken a trade this morning here and here, but we'll start talking about this one right here. Okay, let's go on a 30-minute here. And then we're going to zoom out. Oh, I see some more here. There we go. Okay, so notice that there's a low there, right? That's our demand. That's where demand actually pushed on the 30-minute. However, I don't want to wait for price to come all the way here, and for a good reason, because I'm an intraday trader. I'm looking to be in and out of the markets, right? However, whatever shows on the higher time frame is going to be showing on the lower time frame, okay? And this is all perspective based. So obviously, when I'm on a 30-minute, I don't want to wait for 2 hours, 3 hours, 10 hours for price to get back here for me to buy. I'm interested in trading now. Therefore, I will go down on a lower time frame, say on the 5-minute, maybe even 3-minute, and then now I will put the 3-minute now as my higher time frame perspective, which means I'm only using the 3-minute as a higher time frame, no higher than that, right? Anything below that will be my lower time frame entries, right? So we know that 3-minute has a higher time frame, more demand than it does the 1 minute, 30 seconds, 15 seconds, and so on, right? So when I see this, when I see price retracing, right here, you can see a high. There was some supply coming into place right there, right? Supply, right? Price sold, and now it's interested in going bullish, right? Why am I looking for buys here? Well, that's because we know that if you zoom out, even on a 30-minute, everything has been bullish for some time. So I'm interested in buying, obviously, right? And this goes to show that whenever you're going with the direction of the market, okay, you're already doing yourself a favor. You're already taking about 50% of really trading is really just finding the direction. Where's the direction, right? If it's bullish or bearish, you're on that direction, obviously, right? So we were obviously bullish. We did half the battle of actually finding where price should be going. Boom. So we understood it was bullish. Now we need to understand where is our highs and lows. So far, I can tell you that that's my major high, my major low. Boom, done. Now that I found my major high, major low, now I need to find out where my sub and minor is, because that's what I'm interested in trading. Okay, so now you can see here, there's your sub high and your sub low, right? That's done. Once I saw my sub high, sub low, notice what happened here. You can see that supply failed. There was some supply that happened here from this high, right there, and there was more supply coming here, which means now that supply failed, price pushed bullish, and then price came back to our order block here, which is that failed supply zone, right? Which is our flip, which is also a reaction point in the market. And then that's why we were able to enter here for price to continue bullish just like that. Okay, so that's how we did this trade, right? Now, why did I target this high here and not all the way at the high here? Why did I target supply? Well, that's because the higher you are into the market, the less probable the entries will be, or the TPs will be, okay? Because we're already here from this low to this high. So obviously I wanted to play it very carefully and safe here. Okay, so let's continue here. So I look to take a sell here. You might be asking me, why did you take a sell here, right? And I actually didn't TP here, I TP'd there. It's because we already saw that now that this is our major high, major low, I'm paying attention to what substructure is doing, what substructure and minor structure are doing. Okay, this is how you read the market. This is how you read price. It's based on where supply and demand is, right? So once price tapped the supply zone, right? This is a legitimate supply zone, although it's not something I would have been telling myself this is where I'm selling for sure. I need to see where supply is taking over. Where supply took over was essentially here. There was your supply, right? We see that we have a micro low. We have a minor low, minor high, minor low, minor high, and then once we saw that substructure took over here, this is where I didn't enter here, right there. I entered when price broke this new low, internal low right there, for price to come up for me to sell. Now obviously this was a very, very quick entry, and for that matter, because we were obviously still bullish. I'll explain why. So I took an entry here, right, for a 3.3%. We finished, we took another one here, and this is now the micro. There's your sub high, sub low. What is in between your sub high, sub low? It's your microstructure, right? So right here, you can see that we had a buy to sell candle in here. Let's go over here. You might not be able to see it quite well, but it's in there. Anyway, when price comes in here, this is your imbalance here. This is what's called a breaker block, which we won't talk about on this video, but that's a breaker, and then price took bearish there, and that's what I did. I finished these two trades down here, and that was it. Now I could have, and actually before I even started this video, I was actually interested in looking to buy right here. I'll tell you why. Because our substructure, let me go here. If you look here, again, our major high, major low. We had sell to buy, right? So this is our failed supply. So we have minor low, minor high, minor low, minor high, right? Which means this is our next demand zone here. This right here, to go bullish, right? Because we know that the supply hasn't taken over yet. The substructure hasn't taken over yet. It never broke the sub low right here, right? It never broke it. We were still bullish. So if you ask me, I would have loved to enter here, but however, this is way too aggressive because, again, why would I enter this aggressive? I wouldn't, because we are way too high in price. There is a huge probability that price can go bearish here to come and mitigate this, right? So now I need to look for confirmation. And that confirmation comes right here, where I see when there was a high, there was a low, sub high, sub low, sub high, sub low, and right here is when you see that supply. This was the last supply, right? And this is where supply was supposed to go bearish, but then it failed and it flipped up. And this is where now I'm looking to buy. And that's where I wanted to buy, 100%. I was looking to buy right here, and look at that, right? So now we would have targeted this high, right, and finished price at this current high, because now we know and we see that prices are actually bullish from here, because we see there's a low, there's a high, there's a low, there's a high, there's a low, there's a high, right? So you're following price based on supply and demand, where prices are failing, okay, and where prices are continuing. So here, just quickly, before I end this video, because I know it's getting too long, if prices are going bullish, we need all the supply to fail, okay? If prices are going bearish, we need all the demand to fail, okay? Let me just reference this to show you guys what I'm talking about here. If prices are going bullish, like this, okay, let's make it reverse, right? Let's say price is at a supply zone right now, okay? Every demand has to fail, okay? In theory, every demand has to fail, just like that, right? If we're going bullish, something like this, right? Let's say price respected some sort of demand zone. There's your supply, right? Every supply has to fail. Boom, right? So every supply fails, every supply fails, every supply fails, right? But they become reaction points for us in the markets, just like that. Boom. Okay? That's how price looks like, okay? So always understand where your supply and demand is and your structure based on your major structure, or your sub and minor structure, or your microstructure. Okay, guys? So I hope this was educated, you know, and I hope you guys liked this video. If you really liked it, please throw me a thumbs up and definitely comment on the video, because I really want to hear from you guys. I want to see what you guys think about, you know, the setups and all the trading that I've done, you know, obviously. So anyway, guys, I hope you enjoyed it. Take care, and I will see you in the next.